Hey, what's going on, everybody? Welcome back. In this little presentation, we'll be covering bearish continuation setups. Now, if you watched my bullish continuation setups, then you would find this PowerPoint very similar, because honestly, it's all the same. They're the same consolidation setups, except one's for price going up and the other one's for going down. So they have a lot of similarities. Once you understand the consolidation setups for bullish patterns, it's very easy to comprehend for the bearish setups as well. So that being said, let's go ahead and start. Alright, so just like the bullish, there are two different types of bearish continuation setups: the consolidation plays and the rally plays. So there's the low base, descending triangle, and bear flags, just like in the bullish, where there's high base, ascending, and bull flags. And then instead of bull pullbacks, these are bear rallies. So after for consolidation plays, after the stock price of a stock makes an extreme move, it needs to take a break, and this is known as consolidation. The consolidation is where price gets tighter and tighter, building up energy to be released. And actually, that's supposed to be I messed it up. That is supposed to say lower, not higher. But in rallies are the same way. Price gets extended and they rallies back to resistance or moving averages that are acting as resistance, and then it continues lower. Right now, the very first one, it's a low base. And remember that the low base portion is just this part right here. So trend analysis, it is trending down. It's made a recently swing low, so there'll be this part, bam, right here. And now we're in the low base, we're consolidating. And so it brings the stock back to the EMA or SMA, whatever you like to use, which is that blue line, or an upward trend line, which could be like this. And then it relatively equal highs and lows, hence this part, so equal highs and lows. And then when the stock breaks this support level, that's when you would enter the trade and write it further down. And I got a live example of that. Oh, there it is. Okay. This is Macy's. I had to go into my trading journal to find a bunch of these bearish plays, but this was last August. So, see, it was after earnings, it gapped down. Very, 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 very tight consolidation around the $16 price, and then once it broke these lows, I entered short. And then also on the breakdown, you want to see increase in volume, which you see right there, and just write it down. Whatever bearish options play or short stock, whatever you wish to do, that's just the setup you do. Very clean and easy to do. Alright, next is your descending triangles and bear flags. So just like once again, trending down, made a new swing low, it's consolidating above a certain support level, just tapping it. And once again, the reason this works is that there is a buyer holding that price up, and then once that person buys all the stuff, and then all the sellers are here, the sellers can finally push it lower. Alright, and so this is what forms the triangle. It is... Where is my pen? I'm sorry about that. It's touching these lower and lower highs, but it is relatively equal lows. I might do some editing to make that easier to see, but that is where the triangle comes into play. And then once you break that support level, you enter it to go down. So just to cover the trend analysis again, makes a new swing low, trading below a 50 SMA, consolidating basically above support, and you're waiting for support to be broken. So it's getting tighter and tighter and tighter. Hits that moving average, which is right there, when it has lower to equal volume, and then it's triggered once it breaks below, right there. I know this seems very repetitive, but honestly, that's just how easy it is to spot these patterns. And here is a real life Descending triangle. Also pulled this from my trading journal back in last September 2019. So you see that it's kind of right there, support, and you can see that once it broke that level, we have an increase in volume. So then get short whatever bearish play you wish to do, and once again, write it down. Alright, bear rallies. These are backwards compared to the bull pullbacks. So it's trending down just like all the other ones. And then once a support level is broken, you wait for it to come up and retest resistance, which just happens right here. So like once again, you can imagine this side right here is a descending triangle. It broke, but you missed your entry. You wait for a retest of resistance and you get short right here and write it down. And I have an example of that as well. So yeah, the rally brings the stock to an upper trend line or SMA EMA, prior support resistance. Like I said, you want lower to equal volume on the rally, and a reverse candle at the support area or the resistance level will be good, which would be right here. And then the trigger will be, I completely did not edit this one right. This is all almost backwards. So the falling SMA, the rally brings the stock back to an upper trend line, which would be, we'll say this part, which would be, we'll say $50. And then it's also matters right here, that where it could be rally, reverse candle at the resistance level, and then it hit triggered whenever it trades below the prior day's low. Sorry about that. And here is another one from my trading journal. So this was actually a really good one. So got resistance right there at 65. You can see it tapped it right there, tapped it right there. Gap down right here. This is probably earnings. Almost came up and touched it, was rejected. I waited for it to come back up. And right here where you see these triangles is the day I entered. I actually entered a 260, 245 bear put spread, so a debit spread. I wanted to take advantage of more delta, and I was targeting this recent low. In this example, so like I said, on this one I entered a 260, 245 bear put, and then it came down and it went all the way down. I let it expire for a max gain via same day substitution. That's why there's weird triangles on here. So this is the day I entered. The triangles, like it says right here, are option buys and sells, and then this part is stock. So whenever it expired below down here at 245, that means I was short the 260s and I covered at 245, and right here is where they closed my options part of it. So that is what's called same day substitution. So you don't really get assigned shares. You kind of do, but if it's hedged, then you, like I said, you got short there, covered there, minus the cost of the spread. Like I said, and that's it for the bearish consolidation plays. I'm sorry for the little typos, but they are just the same as the bullish ones, except backwards. If you have any questions, please let me know in the comment section below. Subscribe, like the video, share with your friends, whatever you wish to do. Thank you very much and have an awesome day.